the next item is the status of the 2013 audit, which I assume our auditors, Mr. Roselli, is going to review for us. And we'll get to that in just a minute. While they're setting it up, why don't I go to item 4? I asked to put this on the agenda specifically because it's a letter addressed to the auditor from the town, and it has a lot of very specific representations and warranties, and I had to sign it along with a representative of the school committee, and it's a serious document. It says we do a lot of things, we represent a lot of things, and for example, item number 17 says we have disclosed to you all known actual or possible litigation, claims, and assessments whose effects should be considered when preparing the financial statements. So that's the responsibility of all of us. If you know of any claims, asserted or unasserted, you're supposed to disclose them to the auditors. And there are a total of, what, I see 45 items in here, plus a lot of subcategories. And I had to sign these when I worked in a public company. And just remind you all that you all have specific responsibilities related to the representation of the computers on that. It also says, for example, at the very end, we are responsible for preparing and implementing a corrective action plan for each audit finding. And from the committee's point of view, and the Board of Selectmen's point of view, we recognize we have to work through our staff, count on you to be available to actually execute that. I encourage you all to read it. All right, and are you ready, Tony?
Yep, I'm ready to roll.
Does everybody know you? We have new auditors, Roselli and Clark this year. Tony Roselli is the principal on the account. And the audit is in our packet, along with a copy of the management letter. And the airport standalone audit is in the package as well. And Mr. Roselli is going to review his work product for the year. Tony, is that close enough?
Thank you for the great introduction. Again, my name's Tony Roselli. My partner, Chad Clark, is also with us today. And I thought it was a good idea for both of us to come because we kind of broke out. The audit is so vast and has
That's
so many
Roselli and Clark.
Yep.
So
Exactly.
we've got the guns right
I don't
here.
think you've met
I haven't.
Chad Clark.
Nice to meet you.
Nice to see you. Do you know Bruce Miller? Matt Mulcahy,
Hi.
members of the audit committee, and the real work is
And a lot of people here
here
during
and
summer.
here and there.
You may have met him through the TV screen because we did that, I think we did that one of them.
Yeah.
Oh, that's
A couple of them.
the Skype conference that one day.
Yeah.
So I thought it was a good idea for both of us to be here because the audit does have a lot of different components and we kind of split up who did what. So there could be some questions that I might not be able to answer that Chad probably can. But basically what we're going to do today, and the way I break up the management letters is, I'd like to talk about economic trends. How's Nantucket doing versus the world, versus yourself? What are the trends versus your peers? What's happening out there? So we'll talk about economic trends. That'll kind of dovetail into bond rating. I know that this island is very capital intensive and probably will continue to be. So the bond rating is important for the town. And having the most desirable bond rating that you can get is something you should strive to achieve. So we'll talk about some of the things you might be able to do that'll help that process along. The beginning of the management letter, we'll talk about some informational items. These are not findings. These are things that we're just making you aware of. Things that, what's happening in the accounting world, what's happening in the DOR world, and things that you may want to consider, but it's not a finding. Then we'll get into findings and recommendations, and I put questions at the end, but please feel free to ask questions as we go along, and we can go from there. So next slide, Chad. Okay, what's an audit? Okay, why does Nantucket need an audit? An audit can be required for a few different reasons. Number one, if you have received more than $500,000 in federal funding, you're required to have a single audit, which is part of why you have a financial statement audit, because they go hand in hand. Number two, if you are over $10 million in debt, you have a reporting responsibility to your investors. That has to be done within 270 days of year end. So by March 26th, you have to issue what's called an official disclosure. It goes right to Wall Street and gets circulated to all your investors, and whoever wants to read it, the report is there. So that's the second reason. The third reason is good business practice.
Just on that
Sure.
one, so that's a separate document? The disclosure?
Official disclosure is a separate document.
And we presumably have been filing it every year
Absolutely,
for
yes.
some period of time.
First
far back
Southwest,
as I
I
can
think,
go.
helps you with that. Yeah.
You might send each of the members of the committee a PDF copy, just for the record, so we see what it looks like. Thank you.
It's an interesting document. It'll talk about a lot more things than just the financials. The financials are integrated within this 200-page document. About 100 pages will be the financial statements. The rest is what's going on in Nantucket, what's the tax rate, it goes into a whole bunch of things, and I think you'll find some of it fairly interesting reading. Who your biggest employers are, how many employees they have. It really gets into a lot of the demographics of the island. Lastly, and a good reason to have an audit, is good business practice. It's nice to have an independent, critical analysis of your operations. What can you do better? What can you do more efficiently? And more importantly, when the management letter is given to the financial team, how do they respond to it? Will they fix it and implement corrective action, or will they ignore it? A town that fixes it is a town that is going to do well and is going to progress. And from what I've seen in Nantucket, you've taken all these consultant reports, you've taken all these management reports, and you've made very good efforts to fix the problems. I've seen a lot of progress from the first reports that I saw from the Abrams Consulting Group back in 2006 to now. There's been significant progress made. So that is basically the third reason why you would want to have an audit done. Now, one thing that an audit is not, it's not a forensic audit. That's a type of audit. What we've done is not a forensic audit, which means if there is some fraud that's happening, say at one of the departmental levels, someone's taking in cash and not turning it all over to the treasurer, that's something we probably wouldn't catch unless we went down and did some sort of fraud work at that particular department. And we're going to talk about that in a little bit. So this is not a forensic audit. So if the question that comes up whenever in the newspaper, it says that, okay, so-and-so stole $4,000, and they've been fired, and the district attorney is looking into it. One of the questions that's always asked is, why did the auditors catch it? Well, that's not what we're really being paid to do. If there's material fraud and there's some fraud in what we're looking at, then we probably should be catching it and looking at it. But like I said, in these little departments that are out there, it's just not going to happen unless you drill down and go to those departments and start really analyzing the procedures in those departments. Any questions on that? Okay. The audit's performed in accordance with GAGAS, which is Washington, D.C. puts out a book called the Yellow Book. It's got all the accounting standards in it, and what they try to mirror is what the AICPA, the American Institute of Certified Public Accountants, puts out. So we've got to follow basically specific standards. And then you can kind of customize that to go outside of the a box and do your own procedures. The most important thing is it requires a review of an internal control over major transactions. And we do a risk assessment based on our review of internal control. If we have problems when we do our risk assessment of internal control, an item called SAS 115 kicks in, which we're required to report material weaknesses and significant deficiencies. And you've had those in the past, the material weaknesses and significant deficiencies. Happy to report we did not call anything a material weakness or a significant deficiency this year. And there's been so much progress made, and the items that were called material weaknesses and significant deficiencies have been, for the most part, corrected. Okay, Chad, let's go to the next slide. Okay, just some quick background. As you're all aware, past 20 years, if you go back on the website, you've got all the reports, the chronology. There's just been a struggle. There's been a struggle to maintain sound financial practices. It was highlighted or peaked with the issues at the airport. Since then, there's been numerous consultants' reports. We mentioned the Abrams report. There was a Markham report, and just Powers and Sullivan's management letters. Material weaknesses were cited, and significant deficiencies were cited. We feel the town's turned the corner, and it's important to sustain momentum now. We think that the controls are, although as we'll see, we will see that there are still some findings, but I think the town has made a tremendous amount of improvement, and you should be given credit for that. Any questions on this slide? Okay. All right, let's talk about the economy in Nantucket, or the economic trends. One thing we like to look at is reserve balances. And your reserve balance is the amount that you have in your undesignated fund balance plus your stabilization fund. When you add those together, that equals your reserve fund total. You can see since 2009, the number's spiking, which is a very, very good indicator. When you go for your credit evaluation for bond rating, this is something they love to see. Just that nice spike. On the next slide, we'll see how it compares to. We translate the reserve into what's called the reserve ratio. You divide that reserve amount by the budget, gives you a reserve ratio. You can see Nantucket's reserve ratio is close to 20%. When you get your credit evaluation, they like to see as a rule of thumb 10% as a really, really good goal. You're way above 10%. You're almost double the 10%. The state average, in fact, is about just under 7%. And then once you go below 5%, the low-end metric, that's where the red flags go off and you start looking at potentially having junk bond ratings and whatnot. But you can see here that Nantucket is well above the high-end metric, the state average, and the low-end metric on their reserves. So it's created a lot of flexibility for this town from a perspective where you can go in and appropriate to do some capital projects out of there. It can help your budget out. If you have deficits, snow and ice, which usually isn't a problem down here. If you have snow deficits, it helps that process out. So reserve ratio is a really important thing that the bond rating people look at.
The reserve fund is stabilization plus
undesignated fund balance. So you add those two, divide it by your budget, gives you your reserve ratio.
But not to be confused with the FinCom reserve fund.
No. No, different animal than the FinCom reserve fund. Any questions on this? Okay, Chad, we'll go to the next slide. So just to summarize, financial trends are excellent.
Tony, just to go on one question. That's everything together, or is that just the government funds? Does that include?
General.
This is in the general fund.
This is just the general. So
General
it doesn't
fund.
include the sewer enterprise fund,
Nope.
the airport, and so
Nope.
on. Okay, thank you.
Which are all very solvent, I might add. The nursing home that's got some inconsistent operations, but all the other funds, from what I saw, were fairly solvent. The health insurance trust fund, I'd like to see the fund balances go up a little bit. That's typically like to see 20% of the expenses in there, so that's a little lower. So that's something you could work on. But overall, the town seems.
I think that is something that we reviewed with our consultant. And we are putting a little bit more in to bring the balance up.
Yeah.
So.
Is this cooking company?
Yes.
Yeah. But overall, the town's in a really good situation. Your bond rating is a AA2, which puts you in about the top 20%. Just the other day, I read that Eastham had gone to AAA. Orleans, Dave Withrow called me and said that once Eastham went to AAA, Cape Cod Bank and Trust called them up and said, you're probably going to AAA next because you're very close to Eastham. Barnstable is a AAA, and I believe Chatham is a AAA. So Falmouth is a AA+, so I can see them going to AAA next also. So a lot of good things are happening down in the Cape. So I'd like to see this really start to, the next time this evaluation is done by the credit people, you should involve us. We've gone through this a million times, and I think we can add a little bit to help the finance department get you through that hurdle. But one thing, AA2 is a Moody's rating. I'd love to see the town maybe go to S&P.
We're doing that. On the
You're
next-
doing that.
On the next
Excellent.
go-round.
Yeah,
Which will
that's-
be in May, I think.
Yep.
You know, I think
Okay.
when we went through this before, we indicated interest in seeing, it was Chatham at AAA, or
Yes.
to pick out a couple of those and compare our metrics with theirs, just so we can
Yep.
easily understand the differences as to why they're, if it's identifiable, Tony, and so we know what we're dealing with.
One of the things is you've had material weaknesses. Okay, those are, once they've got 5 or 6 attributes. One is management. When you've got material weaknesses, management's not going to get the top grades. So those are gone now. So that hopefully will help. And actually, let's get into the next slide, because this will talk about some of the.
Yeah. Well, also, S&P has recently rewrote how they're evaluating governments, and they seem a little more government friendly than Moody's, acknowledging that a government isn't a commercial entity, and that's kind of helped, I think, a lot of these communities get up to their AAA because they're no longer being evaluated as a commercial entity, and that's been a big thing for them. They actually have an app now.
Yeah,
for
you can do it
that
online.
you can actually plug stuff in and it'll tell you what they think your rating should be. So you can kind of play with those metrics like you were talking about as well.
Since we pay the fee, is it sort of like a pick and choose? I wouldn't want to say that,
Yeah.
but,
I guess on a follow-up, how often is the credit rating assessed? Is it yearly?
Once a year.
It is yearly. And so,
Every
back to
time
your
you
point,
borrow.
I mean,
Every time
Every time you borrow,
Right.
it could be twice
Yeah.
a year. Yeah.
oh, every time.
At least once a
Every
year,
time.
at a minimum of once a year.
But they'll do a stronger assessment and come out if you ask them. So, I mean, some of it's over the phone and a little more informal.
Do they come to the island when they do it?
No, they haven't been here in quite
All
some
right,
time. But
they
again,
should
it's
be
very
invited.
much
They should be
really-
invited to the island.
Show them
You
the
should
infrastructure.
Do
Show
a
them-
do a
yeah.
complete tour.
Sure.
Maybe
Yeah.
end it here with a PowerPoint presentation. Have maybe like a little bit of a buffet set up. Dedham just did a wonderful job. They rented a nice like limousine, just drove everywhere.
Tony,
And they
stop,
went
stop.
to they went to AAA. They
We're not getting limos. Okay?
no, don't get limos, but they went to AAA.
And
when
they
I
have a
say-
lot of
when I
debt
say
coming
limos,
in.
one of those bus
Yeah.
limos.
Yeah, and they had a lot of debt coming online, so for them it was important
Yeah.
because they wanted to get that interest rate. down.
The one thing that those 5 communities that I mentioned that are AAA.
I have a list in the office that I've been working on.
Nantucket's reserve ratios are well above those communities. Orleans is at a 12%. Falmouth is like 8%.
So our management letters have had a significant,
Yes.
I wouldn't be surprised, that makes sense.
Yes.
So if we're out of that, maybe we can
We
make some
have
progress.
a bit of discussion with Cinder about this. She sent us the Standard & Poor's app to.
You've got that, okay, so you can play with it, right?
And she has said that when we do the next bond rating call or whatever, we'll do a lot more prep
Yeah.
and involve finance, admin, BOS, maybe FinCom chair, and you guys.
Yeah.
I was actually just talking to someone yesterday who's going through ratings, and one of the things that we noticed here is you have a very well-developed finance office with people. There's a lot of policies and procedures established here, and that's a big
We
question
always look at
that they ask. Is they say, what do you have for policies and procedures, and are they written? And a lot of communities can't say yes to that question. You can. So you're already structured to be able to answer those questions better than a lot of other
Right,
communities. So
right,
I want to point
right,
that out, that
right.
all that effort in doing policies and procedures, there is a benefit to it beyond
Yeah.
just
They
creating that.
ask for copies every
Yep.
time.
Yeah.
They give copies of everything.
And these are the things that go into a rating, and some of these things are already, Nantucket's already, working on. But conserve free cash, obviously you're conserving free cash here. You've got one of the highest ratios in the state in terms of reserve ratios. If there was a reason to increase cash, forecast revenues conservatively, enhance revenue, and turn funds back to surplus. Right now, I think your free cash is probably what you should probably start doing. To me, a good reserve ratio is 10%. Anything above that should start diverting to maybe a capital stabilization, OPEB stabilization, or OPEB trust rather than a stabilization. So that the 10% is the buffer against the emergencies, and then the other amounts above that go into these other reserves. And the credit evaluators really like to see that game plan, that you're working to fund, like here we have some increased funding to OPEB. That's one of the biggest questions in the review is what are you doing about OPEB? And so that's, you've got to be well prepared to answer that, because that's, down the road, this is a huge deal down the road. Maybe not this very minute, but down the road, OPEB is going to be the biggest problem for a lot of these communities.
What are some of the metrics we're seeing in the next 10 years, pay as you go?
Gonna
Okay, what?
double to triple. Yeah,
double to triple in 10
in
years.
the next
so.
10 years, if people don't fund it.
And that's the budget, pay as you go.
And the beauty of funding it is right now you've got to use a discount rate of 4%, okay, because you're not funding. So when they do their study, they go in and they say, okay, what discount rate, which means the present value of this liability, they come back and do a calculation of it. If you use 8%, it's going to cut the liability down significantly. But you can't use 8% unless you're funding it. So part of the reason of funding it is to get the higher discount rate, plus you're creating a planned asset. So what Dedham did is Dedham is funding it, and they're creating the planned asset. So they got a double bang for the buck, and they got a AAA rating now. So there's some tweaks to the process that will bring that liability down real quick, as well as healthcare reform and some other things that you can be doing to limit that liability. 5-year financial projection. I mean, this is something you're probably somewhat doing now. They like to see that. That should be nicely, displayed for S&P. Financial reserve policies, again, that should be submitted to S&P. You've got a lot of this in place. So I think it's packaging it. Packaging it, getting them here, letting them feel here, rather than the phone. And I think you're going to end up with a pretty decent result.
To what extent do we have to fund OPEB in order to get the benefit of the increased discount?
Well, that's a good question.
What percentage?
I would say, and again, this would probably be a good question for the actuary.
Ballpark.
I would say you're probably going to have to do about half to get the
Half
full
the
benefit.
annual,
Half of the annual.
so,
yeah.
which was $4 million, so like $2 million.
Yeah.
$2 million
Yeah.
annual.
Yeah, Dedham's fully funding every year. So, but you could get what's called a blended rate. So they could knock you from 4 to 6, not all the way to 8. So you could get up to 6% if you're doing like a partial funding. Say you're funding 25%.
Okay.
I could see them doing a 6% discount rate. So, and I think Siegel and Associates does your actuarial study.
Part of the Cape group, right?
Yeah. Yeah, they did. It's a consortium, so everyone puts in a little bit of money to get it done. So any questions on that before we jump on? Again, okay. So informational items. We talked about other post-employment benefits. Again, it's not a statutory requirement right now to fund it. That's why we've got it under informational items. So if you don't fund it, you haven't broken any rules, you haven't broken any regulations. We think it's a sound financial practice to begin to think about it. Your unfunded liability, I believe, is about $88 million. And, we'd like to see that with some management come down. Health insurance mandate, I believe, is in process. Back 2 years ago, with the Healthcare Reform Act, the state basically requires you to do an audit of your subscriber base, which means that families whose kids have reached the age of not being dependents should be submitting birth certificates, people that have gotten divorced, people that have died. These audits uncover those types of things, that people who are on the rolls that shouldn't be on the rolls anymore. So from what I understand, help me out, Deb, that's audits.
Yeah, Amanda and I have been working on that for a couple of months.
So that's in process
Yes.
at this point. And that's to be done every 2 years according to the law. So, and then one of the things here that I put down here, which, depending on what happens with finance and whatnot, the goal was to potentially do a CAFA this year, Comprehensive Financial Report, which is above and beyond the normal financial statement. But most of the communities whose bond ratings have gone up, and S&P absolutely loves these reports, have gone to the comprehensive annual financial report for a financial statement model. Barnstable has that. I'm not sure who else on the Cape does, but I know Barnstable's done one for years. I don't see any reason why this town cannot do it if you get the right situation in finance. So I just put this as a goal for the finance team. And we would help out with that
So
process.
is there a cost to that? I mean, we have to spend 100 more hours, or what are you talking about?
It's extra hours. Yeah, it's extra hours. I would think we've done it soup to nuts for towns, and it's been about an extra 3 weeks of work, so about 150 hours.
In the initial year, after that,
In the initial year, that's
because a
about
lot
1
of
week.
you have to show 10 years of data, so it means going back the first year.
So once you got it in, you got it in.
yeah,
Yeah,
then you
then-
just have to update it.
Then it's about 40 hours a year after that. So the
40
first year,
hours by one person, just to make sure I
one
got
person
what you're
should take
talking about?
40 to 50 hours to
So
update it.
it's 2.5 weeks' work.
Yeah, to update it.
One of our people or one of your people?
One of my people.
And then you can also submit it to the GFOA and get a certificate of achievement,
You get the award, right? If you
which is
submit
a
it,
national.
passes the test, you get an award.
And again, the benefit of this is really to improve the town's financial rating.
It provides more transparency to your reporting process for investors, taxpayers, just for the townspeople themselves. S&P likes that.
But I think Matt's question is good. At some point, you need a tangible benefit. So far, the interest rate goes down 0.5 point on average, it's who affects. My guess is Nantucket sells through its rating just on its name, but I don't know the facts.
Yep.
So you'd want to make sure, if we're paying you an extra 2.5 weeks, that's not all
Yeah.
that much money, but you want to make sure you get a real benefit, not just a prize.
That's right. That's right. Okay. And we've talked about this, but right now, GASB 45 is the accounting standard that brings up OPEB. Your liability is 88.6. There's some limited funding now. I think I saw 250,000. Yeah, 250,000 in the trust fund. But your average age is about 50 of your employees. So that means that people are getting closer and closer to retirement.
Just to remind us on the trust fund, I don't think we've, or have we, actually adopted the bylaws and the government structure for the trust fund yet? Or if we have, I don't remember it coming back through the board, so.
Right now, where is it again?
Right now, it's at Morgan Stanley. With Dave Travahari.
And it's in with.
Oh, excuse me, no, it is not. That's our trust, the trust fund. Right now, it's in just a regular bank account. I've spoken with Dave Travahari about moving it over, and he's going to put a sample portfolio together for me to show everybody before we make the
Yeah,
move.
well, I think, for example, that's a question. We need a way to, do we send it to the state to go to be invested by them, or do we do it, or
You do it.
who are the trustees?
You control it.
You can join the
but
state.
we
You can.
So I think it might be worthwhile making a call to Mark Abrams to see, what he has on that and formalize it a little more. Any questions on OPEB? Okay, next. All right, we've got one slide devoted to the airport. Just quick overview. I've read a lot about the airport, about the procurement issues, about the lack of communication. It's gotten significantly better. There's better communication with the town. There were really no procurement issues, so to speak of. And overall, we were fairly happy with what was happening at the airport from a financial standpoint. A couple of things that the airport should work on is the accounts receivable. And let me step back. The airport has a set of books, Great Plains, or Dynamic. The town has Munis. And then you've got a third party, which is Burke and Lamb, that's got another set of books. So there's really 3 different records here. The goal is for all 3 of those to equal, or at least identify, if it doesn't equal, why. Did Burke and Lamb book depreciation and the town doesn't? Did Burke and Lamb book an accrual that the town doesn't? But identify why those differences are there. Now, what happened this year is Burke and Lamb really didn't start their process until the end of September. We came in the beginning, right at the end of September, beginning of October. So it's like hitting a moving target, because I would like to see a process where Burke and Lamb is already fully reconciled to Munis, so that Munis and the airport now equal, and then we work with that document to do our audit. That's what I would ideally like to see. And that wasn't the case this year. We were kind of working with Burke and Lamb. So again, it was like a moving target type of thing. So resultant of that, the accounts receivables weren't in agreement. We had a number of adjustments, because adjustments were made by the airport after Irene had submitted the Munis balance sheet to the DOR for certification. So the DOR balance sheet should not be submitted until a phone call is made to the airport and someone said, have we all the adjustments? Because there were variances in there. There were variances in the way the in-transit credit card balances were being accounted for. The town had a certain amount as a deposit in transit and a certain amount as what's called receivables. The airport had it all in receivables, and then those didn't reconcile. So that's where I saw the issue in the airport, where I'd love to see some improvement. I don't know if the airport people agree or want to comment.
I have a question. I wasn't aware that Burke and Lamb and the airport were using different systems. I thought they were both using the same system. And if they're using different systems, I don't know why that would be the case.
Well, they use the same system, but Burke and Lamb, what Burke and Lamb does is takes the airport system and then makes all their adjustments on like an Excel spreadsheet. So they've got this Excel spreadsheet that's got different balances than what the airport has, than what Munis has. So,
but that's the point. I mean, they need to reconcile the finished Burke and Lamb airport version to the
yes,
Munis.
yes,
Okay. And that's the issue.
that's the issue, right?
Okay.
That's the
But
issue.
that's a solvable problem.
It's very solvable.
Yeah.
Have Burke and Lamb come in a little earlier, work with the product earlier, get the information to Munis, and then everyone should be in agreement. Then we come in and do the audit. We had a big learning curve this year. We weren't sure exactly how the airport worked, exactly how these other enterprise funds work. We now have a better idea on how this should be managed going forward. And we do urge you to continue to use Burke and Lamb. It did make the process a little easier for us, because they were going into the nuts and bolts more.
Mr. Chairman, if I may. I'm Dan Drake, Chairman of the Airport Commission. I have a couple of comments and a question. The first comment is, I look at these recommendations as sort of presenting us with a glass half full. Because, as you know, whilst in the past the prior auditor was supposed to do an audit at the airport, he really didn't. And I think these are things that should have come to the fore long before now.
Absolutely.
And so it's a good thing they have come now, and we'll deal with it. My second comment goes to the process a little bit. I think the airport personnel were a little disappointed, particularly the manager, that there was no effort to contact him or talk to him during the audit process. And, from our side, the man who was assigned the job said he'd never done an airport before. And, I'm sure he did fine, but it was a little unsettling from our side of the coin that we never had any chance to talk to him.
Okay.
And the third point is a question. Well, one of the major issues, obviously, in the past, and one that was noted by the prior auditor, albeit in a very obscure footnote over the years, was the situation with the capital accounts. And I assume by your silence that you have satisfied yourself that those are in order now?
The capital accounts are in order, yes. They agree to munis, they've been audited, they're reconciled. And one thing I just want to also say before I lose track of it is the revenue's reconciled to the dollar, to munis. So the revenues are being reconciled, they're reconciled to the dollar, the cash reconciles, it's the receivables are really the only area that does not reconcile. And to your second point on communication, we were told at the beginning that all communication goes through the finance director. That's what we were told, and not to step outside of that boundary. We now understand how this process, again, I told you there was a large learning curve for us on the airport, and I think we can manage the process much more efficiently and better this year to the benefit of us and the airport personnel.
Thank you. And just on the capital accounts, one other question. One of the issues we've had in the past, I don't know whether it's been cured or not, I haven't really asked about it. But one of the issues is that adjustments were made to the capital accounts by the finance department without consultation with the airport, without any reconciling with the airport. And we find all kinds of unusual things charged to capital accounts that maybe shouldn't have been or should have been charged somewhere else. Did that come up at all?
We didn't see that. Bob, correct me if I'm wrong, but that all worked. That all balanced.
I think we've cleared all that stuff out.
The finance, Bob and his group were assigned to figure out these capital accounts, and at the end of the year, they worked. They balanced out.
I'm just saying, in the past, there were adjustments made along the way that were not conveyed to the airport.
Yeah.
Until we stumbled on them, basically. So that's a part of the process.
Yeah.
That hopefully has been corrected, but if it hasn't been, it should be.
I mean, we were told we couldn't speak with Burke and Lamb, which was ridiculous. The first phone call I made was to Burke and Lamb. They're the ones trying to do the reconciling, so why wouldn't I want to speak to Burke? So those are some of the hurdles that I don't think will be there for the next audit.
Great. Well, as I say, I think we view this as an opportunity rather than criticism.
Thank you. Just one item of semantical. Some of the capital assets that are on the depreciation schedule, and I'll communicate this to Burke and Lamb, appear to be very old. They're probably things that are no longer in service. So I had made a suggestion for somebody to go through the list, and if they're not in service, we should remove them from the list. And procurement issues, they seem to be resolved. So next slide. Chad, do you want to talk about payroll? I know this is an area that you...
Yeah. So relative to the payroll situation, if you read the management letter, it's kind of wordy. It was really more there for the finance office as a communication tool to give them some guidance and direction. I know I talked to Deb a lot about it, and they're looking into it. The main concern that we had is that the payroll warrant itself was less than the gross wages being paid. In concept, the way we view it is whoever's signing the payroll warrant should be signing off on the amount of the expense the town is incurring at that time, which should be gross wages. On top of that, I know the town also puts in their portion of the health insurance trust funding, so that should be added to it. So when we saw the difference, we inquired as to, well, where is this warrant amount coming from? And what they showed us was Munis prints out a cash requirements report, which is gross expenses, or gross payroll expenses, less amounts that are being withheld from the employees that's being kept by the town. So some generic examples would be you only pay your pension system once a month, but you may have payroll every week. So those first few weeks, you're not actually writing a check per se and sending it out to the retirement system, you're withholding it. Munis would call that not a cash need in that week, and therefore the amount of cash would be lower. What we're getting at is that we would hope that in the future the warrant would equal the gross payroll, and then there would be a reconciliation of what gross payroll is to the cash needs report, because the treasurer still needs the cash needs report, because that is how much money they have to move and manage relative to the payroll. But some of these withholding accounts are causing a difference, and I know that's what's being researched right now is exactly which ones.
It's not even the background of Munis.
Yes.
And that's what we're looking at now that we've had the upgrade. I think it's going to be a little easier to find, but it's been, well, I've spoken to you about it a lot.
And I want to say there's somewhere in the vicinity, too, like just for clarification, probably 50 to 100 withholding accounts. Like when you print out the details.
Yeah, when you print out the detail, there's in the background,
Right. There's about that many, some of which pertain to this calculation, some of which don't. And Munis doesn't clearly in that report tell you which ones pertain. So that's one of the hurdles that's kind of getting through is, yes.
I assume Munis is used by a number of towns.
Yes.
So this issue can't, I assume isn't only ours. And the workable solutions are available.
Yes.
Yeah, they are.
Yeah. No, absolutely. The system does work. And in fact, it was from that knowledge. I know we had a lot of conversations of we knew other communities could do this and get it to work. So I think it's just a matter of identifying those accounts, figuring out how maybe they're programmed into the system as a withholding account, and then identifying it that way. Limitations on the transmittal sheet. This was something actually I had had a conversation with the prior finance director. I know she was looking into it. The payroll people in the finance office get a variety of different timesheets from the different departments. Sometimes those timesheets are not in the amount of detail that they need at the finance director's office in order to properly code transactions. Things like overtime, there's some stipends, issues like that. So what happens is it comes over and there's a little bit of a assumption going on as to, okay, that means that this should go in this category and this category. The other thing we noted on transmittal sheets was that not every department totals their transmittal sheets by those categories. So what you're losing is, as the information is being keyed in at the finance office, when they're done, they can't tie that back to the categorical totals that the department thinks should be in each of those categories. And that's caused some confusion and some hiccups along the way, and then having to recode some payrolls. Once again, it's really a matter, I think, of how much information the finance office needs to input payroll, what categories they need, and then having all the departments submit their departmental payrolls in that format, consistently across the board.
One question, and maybe this is for you, Lydia, maybe for Bruce. Didn't Abrams recommend changing how the payroll is done to more of a centralized everything?
Yes, and we are in our fiscal 15 budget
Okay.
presentation, we have the purchase of some software that these guys went and looked at. It's in use in Medway and some other
Another
towns.
time. I think I talked to you about it.
Yes, all right, so
And
you're
that
still
would
looking at the
help
system.
with this.
Yes.
Yeah.
Okay, from the summer,
It'll be-
okay.
It would help with a lot of
Standardized.
things. We are a little antiquated in how we do it, quite frankly.
It's very manual.
I remember we talked about, that's why.
No time wouldn't be so manual.
Just to follow up for Toby or Chad,
Yep.
Do a lot of towns, or do most towns do their own payroll? I mean, I think of us as not, we're not using ADP or somebody. You could use an outside contractor to run your payroll. Do some towns do that?
This size?
Majority?
Most.
Yeah.
Most
And
of this
so I've
size.
often wondered why we don't. I think I heard we do a lot of weekly stuff, and there's always this, and somebody wants cash, or there were a lot of reasons.
Yeah.
Nevertheless, they're the pros. That's all they do.
Yes.
And I just, sometimes I'm puzzled by our not.
Well, that's going to get to that next issue,
Okay.
which we're going to talk about.
Yeah.
A lot of towns about this size use like a Harper's or an ADP to process payroll, and they're the pros. If there's an issue, they have to make good on it. Like one of the things here, we've got this IRS garnishment, over $400,000.
That's a big nut. So
Yeah.
The
look to
IRS
me like
came in
we're
and
going to
just
write it off
Took the
or
money.
something.
Well, our
Something's gotta happen.
suggestion would be, you shouldn't just let the IRS have it.
No, I understand, but you know, there's the nut. It's a
Yeah,
big
oh,
number.
absolutely.
And I don't recall seeing that number previously. We've had a lot of things pop up, but I just don't happen to remember someone
Yeah.
saying, hey, audit committee, here's $400,000.
It might not have come up in any reports to you, I mean, I don't think you're gonna.
And the way the posting is done, it makes it, it may cause it inefficient to figure out exactly how this happened.
And it may kind
Essentially.
of found itself in with
Into the
this
withholding deficits too.
point
So this
too.
all
is
could
it
be,
might have viewed
this
as.
all could be
That's all
connected.
part
This all
of-
could be connected. Now, one of my another large city that we do work for also had the IRS take incidentally about $438,000. They went through a number of years. The IRS gave them a couple of years to try to figure it out, and they couldn't really make any headway. So the IRS came in and
So we want it.
grabbed that 438.
Oh, and they leaned every property in that
Yeah,
community too.
they
So
leaned all the
sold
property, so
the
you
IRS took it.
They don't fool around.
Right.
You know.
What this community did was they went out and just got a tax attorney to try to figure this out.
And that's
You know,
Lydia
just
talking about that.
get a tax attorney and just show them what's happened and, you know, see what they can do with it. There's penalties involved in there. So even if you ended up having to pay some of those penalties get abated and those fees and whatnot. So that I would get a professional involved in that. It's a lot of money. It's a lot of money. So next slide.
Yep.
I think this is one of yours too. Yeah, this is one of yours too.
Okay. So I think didn't discontinue posting to a liability account. What was happening is you have Wannacomet Water, Syosconset Water, and then you have the sewer department, all which process receipts through Wannacomet Water's office. At some point, and to be honest with you, I got mixed responses as to who gave this guidance to the town in the past. But at some point, what the suggestion was made was that all the receipts from all three be initially deposited or recorded as revenue into Wannacomet, and then those amounts and the amounts for Syosconset and the sewer at that time be recorded as liabilities to Wannacomet, and then at a later point, a journal entry be made to eliminate the liabilities and shift the revenue over to the other two. Not sure what the process in that thinking was, because the reality is that Wannacomet submits reports with all three of those revenue streams already broken out. So it's almost like taking the detail, putting it in a pool, and then breaking it out again.
So we should post directly.
Post
Yeah,
directly.
post directly.
So I'm pleased to say that when we brought that up, I believe it was when we were in right at the end of May, beginning of May, we brought it to the attention, and it was actually fixed that week. It was a fairly easy fix. But now the revenue is going to go directly to them. It's efficient. It doesn't allow for potentially errors the way it works. An erroneous refund posted to wrong fund. I know we looked into this. I don't know if you guys, did you get a response?
From Heidi? No.
Okay, I didn't either, but
Right,
I'm pretty
vacation.
sure that's what it is.
Yeah.
There was a situation. I don't know if it was a result of the top section, but I believe now on the water side they have a daily revenue report of activity. On that revenue report is also where they report any credits or refunds. On this one that happened to be on a sample that we tested, it was a random thing. I believe Syasconset had a $27 credit for a refund. When we rolled it forward into Munis, we found that no credit was posted to Syasconset, but Wannacomet's water revenue was lower by $27. I realize, so what we're talking about here isn't dollar value importance, it's process importance. So I think we've pretty much got that clear. I don't know how often that happens. Normally, probably whenever they get a credit, it's actually probably offsetting revenue that day. So it didn't come out. I don't know if it happened to be that day someone didn't want to post a negative revenue because there was no offsetting, so it got netted. I don't know exactly what it is, but just the process is what we're learning it too. Breakout revenue detail at the departmental level. I believe that's just basically a matter of there are different forms of revenue that comes into Wannacomet. There's user fees, there's special service charges, things like that. Make sure they're just properly allocated.
Well, in that situation, Munis has got it broken out in detail.
Yes.
But the department doesn't. So
when it turns it over.
Yeah, Munis is getting it somehow.
But Munis they're entering that information into Munis. So obviously, the water department has that level of detail. For some reason, when they're doing a turnover form, they're taking some of those items on the actual form and netting them together. So basically what happens is if you're following a transaction through the way we do, you get to this turnover form, you have this thing called other income, $10,000. When you get to the Munis reports, there's no $10,000 of revenue because it's actually broken out amongst 5 other accounts, and you kind of have to sit there and
so just
figure
some
out the
consistency.
So you'd rather have it come in 5 accounts.
Exactly. You can put other income, but then have sub-accounts under it that match to the Munis.
If you're reconciling,
The information's all there.
it makes it easier if you're reconciling between Munis and the department's ledgers to have the same information being posted. It makes it a lot easier to follow that.
Pair it up and match. And that way, too, if there's an issue, it's much easier for either the water department or the finance department to kind of find where that situation may be.
Just maybe another question, and this whole sort of collection and billing and process. We've got the water company, and they got 2 of those, and we've got the airport collecting on various things in the town.
You got the nursing home collecting.
Yeah, so you got a lot of different elements. And is there any potential sometime to have a central collection processing unit? I'm not sure it makes any sense. I'm just thinking out loud.
A lot of towns have what's called a collector of money, and it is centralized at the town hall. But that's where most of the revenue is being generated around town hall. Here, it's so segregated.
Maybe the physical, but
Yeah.
but a lot of these checks must go to a PO box. It's like a lockbox collection, I assume. I don't know. Or are we the lockbox?
No.
Does every check come in?
There's a P.O. box.
There's a PO, but
I'm not just.
No, actually, this last comment actually kind of feeds into what you're bringing up. One of the things I wanted to point out, amongst the other things, is we try to throw a few positives in here. Is your Wannacomet is actually extremely progressive on the collection side. They're collecting money in ways that I've not seen another community do it. And it's the way it's going. Like a perfect example is, I don't know how many of you have it set up that your electric bill, whatever it is, just comes out of your bank account. You don't have to think about it. It just pays it, comes out. No other community I know of has that. If you want to pay on an e-bill or something, like your property tax or your real estate tax, you have to go into the system, program the amount, tell it which day to do it. Wannacomet actually has an agreement with a couple of banks where they actually have this ACH process set up, and they will take whatever the water bill is automatically out of those bank accounts with no additional effort required by the customer. In the case of Nantucket, this is particularly good because you have so many people who aren't on this island right now who, they're getting a minimum water bill, or, I know, some people probably have companies paying their bills for them. It's that much easier. So we actually said, we're actually suggesting that maybe other departments like the airport or the nursing home or even the collector's office, at some point it may be a good thing to have like a little summit meeting and talk about what's been implemented there and if that could have any kind of benefit from being used in other departments. And quite frankly, that's the way it's going, and I'm actually happy to see it, because one of our concerns that we talk about is all the laws and regulations in Massachusetts finance are very much structured around writing a check, sending a check. Well, we all know in the next 5 to 10 years, those days are going to be over, and how that's going to impact the actual processing of expenditures and revenue collections in communities is a big question. And you guys are right there on the cutting edge.
We might save a lot of operating expenses once you get it automated.
Yeah, the money just comes in as a lump sum, and she gets an electronic report. I mean, no money gets handled, and the reports get automatically uploaded. Done.
And is it safe to assume that the software that the water company is using can be applied to other town departments?
It should be, because they're really using basically a lockbox or a mortgage service type setup, which is the bank is getting a wire in through the ACH, and then they're getting a report saying these 100 customers, in these amounts equal the wire. That electronic report gets uploaded into the system, and every customer gets credited that amount.
Do we have to keep a file of the customer affirmative agreement to do that?
I believe you do. Now, this is the part where I'm not sure if it's you or if it's the servicing banks, because you're not doing that in-house. They are outsourcing it. I believe she said through 2 different banks. But once again, what that's saving in effort, what's that saving in the fact that, quite frankly,
It's like
not real money flowing through the town. So from a fraud perspective, it's a much more secure process. So I wanted to throw that out there because I was very impressed on that end.
Okay, as we're winding down, there is, the health insurance trust payments, we went over this with finance. You've accepted the state legislation that allows you to set up the self-insured fund. By accepting that, you have to maintain your records on a GAAP basis. Believe it or not, that's how the bill was written. You have to use generally accepted accounting principles, not UMIS. So, following that, what finance would do is the May service received in June would be paid in July. The June service received in July would be paid in August. So you were 2 months off on your expenses in accordance with how the...
Because that was the due date on the invoice.
Because that was the due date on the invoice.
They weren't delaying it. That was
So,
You got
now...
to book a receivable or something.
Yeah.
payable.
Now, sometimes what the DOR will allow is as long as there's 12 payments, if you're missing that month and it's paid the next month, as long as you do it the same way the following year. In the situation we looked at, it looked like there was 11 and 13 payments. So I just wanted to point that out, that you don't necessarily, the law says GAAP, a lot of communities don't, but they do have the 12.
And they're making relatively equal payments or something, so they're close
Yes,
enough.
so it's
Yes.
consistent.
Right.
So that was the health insurance trust. Just wanted to throw an attaboy out for capital assets. This was a huge problem in the past. This particular island has close to $1 billion in capital assets when you add up all the county and town and airport and water and sewer and mains and buildings and everything else. Close to $1 billion. So it's an important area for the town. And it was all maintained, except for Wanacoma, which was on a fixed asset software. It was all maintained through a number of different Excel spreadsheets. So sometimes the Excel spreadsheets would have formula problems. They didn't add up. And then those Excel spreadsheets didn't agree to what Powers and Sullivan reported. There were differences there. So we thought it was a good idea to just get it all into one software, everything. And we helped the town accomplish that. And after this meeting, we're actually going to do a tutorial of the software down at the finance department with Robin, just to show her how simple it is, how it works, and the great reporting that it has. So, but just to get to this step was just a monumental effort on the part of Bob, Robin, and whoever else in finance, just to pull the whole thing together.
So will the system, does it have sub-ledgers or something so we can keep the airport in the same
Yes.
deal?
If you
Different
press,
fields.
So all
Yeah.
different field, whatever.
Yep.
Yeah, you press airport, and you get all the airport assets. You press Wanacoma, you get all the Wanacoma assets.
So that, maybe in setting it up, you take care of those historical assets that need to disappear.
Yeah.
Mhm. Yeah, any department, you can run them any department, you can give them a list of their assets so they can actually do like an little
And what was
inventory.
happening, the airport was maintaining their own fixed asset ledger. That's why I brought up the comment about the old assets. But on the towns, Robin actually went through and said, do we still have this vehicle? Do we still have this copier? And removed a significant amount of assets that are not in service. So the town has actually already gone through that process. So that was something I had mentioned to the airport because they were doing it on their own, that the airport should go through the same process. Question?
You just indicated they could pull up a report that shows the airport.
Because I took the airports, converted it to Excel, and downloaded it to them. So now you and the town have the same information. So when you make changes, we need to alert Robin that you're making changes on your end so she can make those changes as well.
Well, they're changing, anyway, you gotta work that out so you make sure it happens. It might be easier for them to, so the input is all through one person is the idea?
At the finance office.
Yep. And we can talk about the logistics of it when we get back to finance about how I would like to see it work.
I go back for just a second on the health insurance trust.
Yeah.
We self-insure, and then we hire Blue Cross to administer our self-insurance program.
Cooking company.
Good. Okay. Do we believe we save money by doing that?
I've talked about, I think I brought up GIC, but Nantucket doesn't. It's outside of the geographical. I didn't know if the Cape Cod has a health
We've looked
consortium.
at Cape
I
Cod
don't know if you've
Municipal
looked
Health
at
Group
that.
before, and there hasn't been much of a savings. I mean, we can always look at it, but
I'm just curious.
it's never
At
been.
some point, we must have decided to make the decision to self-insure and assume it would be a benefit.
You
Like
mean
I
as
s-
opposed to having a real insurance
Yeah.
plan?
Yeah, premium,
Right.
yeah.
Is there, I mean, the circumstances change in like every 10 years? Should we review it?
Could we, well, Stoneham just changed after years
Stoneham
of being
went to GIC,
self-insured.
they were self-insured.
We've
they
had
went to
other
GIC.
communities that are sticking with self-insured. So, yeah, it's probably best to, especially here, I mean, maybe depending on the number of employees you had 10 years ago versus now, you know, that could change your evaluation of the cost structure, things like
And
that.
it's like, part of that question also relates to I think, the Blue Cross, in effect, servicing charge for processing
Right.
Mm-hmm.
the billing procedures.
We're paying them to do that.
There's an admin fee to it, yes.
25%
There
of
is
the
an
money,
admin.
whatever it is,
Right.
is going to them.
The switch is a monumental task, okay? So if you decide to switch, be sure that you're married to that for at least 5 or 6 years at least, because you don't want to be switching every couple of
I
years.
think I'll withdraw my question.
Bruce, in the past, I think, I'm trying to remember, Libby Cook or somebody had, the comment I remember is that we had such, because we're 30 miles out to sea, there were some medical aspects that our staff doesn't utilize as much perhaps if you were in Wellesley outside of Boston, and we had in effect, an implied savings by self-insuring. I'm not sure that's
That would make sense,
that's
actually.
sort of what I remember as a general comment on that. Maybe it's not true.
One of the things I wanted to point out too on health insurance, which a couple of cities that have about as many employees as Nantucket are starting to experiment with, is what's called insurance opt-out. I don't know if you've looked into that.
Yeah, we have.
Where if a spouse has a better insurance plan, it may, by giving the employee a stipend, they may elect to opt out of your plan to join the spouses and be compensated for it. And I believe it was Salem, the city of Salem saved about $400,000, and I know Everett and Malden are both looking at it now. So I just throwing it out
Yeah,
there.
it's something to look at. Here, the spousal job opportunities aren't as great as.
Right.
Yeah.
It's usually the reverse.
Yeah.
They're often-
Everybody wants to get it.
Opted in,
Which,
right.
which, to be honest with you, is another reason why the insurance audit is kind of important, because given the nature, you actually have a lot of people who may want to try to get on your plan who don't belong on it. So the audit, there is a
We're an attractive
temptation
health
there.
provider.
Exactly.
We did do this audit back in February 2010, it was done as well, so
Oh,
it's
good.
not been
Okay.
Okay.
undone.
So
Right.
something that's
No,
Long time.
good. But I was just saying that
Yeah.
what he brought up is there is a higher temptation here because of the limited access to insurance, maybe for a lot of the population, to try to find some way to get on it as much as possible.
okay. Then this has been fixed, the purchase orders. I'm not sure what the limit is now, but before it was 0. And that everything had to have a purchase order, and that tends to really bog down things. This is a big place. So I said, let's increase it at least to 500 or 1,000. I don't know what was finally decided.
We're going to change it to 1,000.
$1,000.
And we just need to do the internal
Yeah.
whatever workings to make
So I think that'll create some efficiency. And then there's always the issue of you get a purchase order dated after the invoice, which is not so, it looks like it's pretty unique and scattered, and I think it was more of a problem in the past, but now it's more isolated. But there was still a couple of purchase orders that did pop in after the invoice date. All right. Okay, this is fairly important, which is a limited internal audit process. And what would be ideal for this town is to have an internal auditor. That would be ideal. It's someone that could go and do risk assessment at departments, someone who could audit cash handling, audit the way they do their budgets, and just create policies and procedures at each department. That would be ideal. Whether that's affordable, that's up to the town to decide. Absent of that, you could invoke MGL Chapter 41, which allows the town accountant or equivalent, which would be the finance director, to actually do a limited internal audit process where once a year, on a rotating basis, so in January they may be able to go look at the town clerk, in February the building inspector, and just do audits of those departments. Okay, how many dogs did we license in the month of January? We licensed 220. Well, 220 times the fee should be what got turned over. So that sort of process. Same thing with building permits. How many building permits did we process? And I think this really sets up a nice level of control over your cash handling process. So that's something that I would recommend. And then one thing that
I think that's a broad issue here in a way, because I see this in budgeting. I think of budgeting as often a rate volume issue. You got so many things, whether it's kilowatts of electricity or sewer permits, and you want to say, well, that's my budget. And you got to have item counts to verify.
Yep.
And so I think that's an issue throughout in a way. And once you set up a reporting or a process, it shouldn't be hard. It's not
That's
onerous.
right.
It could be a half a day once you have like an audit program, for lack of a better word, doing it.
So now, one of the things that Libby had asked us to provide is some sort of a proposal that, as part of the audit, for the audit firm to go out and do risk assessments, do 2 or 3 departments a year, and then rotate them. You do a different 3 the following year and the following year, so that by the end of 3 or 4 years, you've gotten a good broad cross section of town audited. Right now, we do the airport. We spend a lot of time in finance, and we do a lot of things with the school. The other departments don't get that drill down, comprehensive look that might be necessary. I know you had a gentleman, another accounting firm, do 3 or 4 last year, and I believe we're being asked to maybe take over that aspect. So we'll.
Did we have that in our agreement? They would do 2 or 3 departments, or what happened?
It got removed
It was removed.
because at that time the other firm was doing them.
Underway.
So that was
And then it was
removed.
subsequent to that we said, it didn't work out so well with the other firm, so we just have you do it. So Tony's going to give us a proposal.
Okay, gotcha, thank you.
Okay, and then as part of that, there'd be this whole reconciling with the school and the airport would be. I mean, those are the 2 big entities in town that I'd like to see a good reconciliation process that could come under here. So next. Just some cleanup items for the treasurer. In the cash reconciliations, we noticed that there was a number of small reconciling items. They all net to nothing, but there's just a lot of them. I would like to see those, cleaned up as we continue to do audits. Match up bank accounts with the funds. Like for example, the health insurance bank account has $3.5 million in it, but the general fund has $300,000 or $400,000 in it. So try to match. What's happening is the town's central checking is paying, but the money from the health insurance bank account might not be getting.
There was a lot of research done on that actually a couple of years ago, and all the warrants have been moved over time, so I don't know.
The initial funding would have been high. Or...
Yeah.
I don't know.
Somewhere it went
It's
over.
always been
Yeah,
out of
somewhere.
whack, but
So-
all warrants have been moved.
Okay. So what's
Yeah.
fair to say then is if you have a specific bank account,
Yeah, one-on-one.
a performance bond or a health trust, match it up.
Because right now,
For
the
whatever
health-
reason that it
the
could
health
The
be.
general ledger.
Yeah.
Yeah.
General ledger, the two general ledger.
Hard to believe, so every time you reconcile that, you got this difference that you just.
Well, no,
carry
because a lot of
forever,
times it gets
and then
reconciled as a pool, like total cash versus total
Total
cash.
to total.
But when
Even
you're
though you have a
maintaining,
Physical, I say physical, a separate bank account, you get a statement.
What's going to happen is you're going to have variance in one, surplus in the other, but at the end, it's a pool, so it's as long as it's equal at the end.
I mean, we do, for bank statement, we do go bank statement to cash book. That's one-on-one,
Right.
and then Bob goes against.
but the general
General
ledger
ledger.
sometimes, yes.
Yeah.
And so when you pool it in the general ledger and you pool and all that, cash is all.
The one that caught my eye was the health insurance trust,
Yeah.
because right now, correct me if I'm wrong, the health insurance trust is getting the interest from that 3.5 million, right?
Is that where it goes in the general ledger? I don't know where it goes in the general, yeah.
Yeah.
So the health insurance trust doesn't have 3.5 million, so they're getting the
Interesting.
credit for that interest, but that should be going to the general fund, that interest, so. It's not a lot of money because of the low interest rates,
Right,
but say we're at 5%.
10 years ago, it would have
yeah,
been
that
a lot of
would be a
money.
lot of money.
But I would assume the money, in that case, if the money belongs to the trust ought to get the interest on it. I mean, whether
Right.
it's physically there or not, it just seems,
Exactly, and it is. In this case, it's getting more than it should because it has too much cash. But from that exact point of view, though, that's what we're getting at is it allows the interest to go to the right place.
And then I know Deb's gone through a process of already consolidating bank accounts, but we've got close to 100 again, so I think it's time to.
There's a lot of escrow accounts. We opened
Yeah.
up, I don't know how many escrow accounts, and they have to each have their own bank account.
The planning, we got the planning, and
Yeah, and we look at those.
a lot of
often.
towns have one management account that's a planning account,
Could.
and each one they list out what escrow it belongs to, so you only have one statement, one bank account, rather than. So you
And
just
they're
wanna-
treated
I'll
as
explain that to you later.
so is this
Okay.
mostly mentioned planning, so if planning requires a guy to put up $100 for a bike path or something? That money
goes into an
gets
escrow
segregated.
account.
Let me ask a question because this can also happen in some communities. Because you have so many escrow accounts, you said a lot came online. The real question is how well are they getting closed out? Like I know sometimes the planning commissions will say, okay, put in a deposit, and then we'll come in 10 years later and the deposit is still there. You know, it's kind of sometimes the escrow accounts can build up quite significantly because the process is completed or the contractor or developer went out of business and they're gone. So I guess the question is and I don't think this falls on the treasurer because they have no control over who gets paid and when. They just pay it. But what's going on in the planning office to
Leslie
keep that
and-
maintained?
Leslie
Okay.
and the finance director were doing it with me. We sent a list out every few months, have her review it, and let us know what's going on with it.
Yeah,
Because there were some old ones that were still sitting on
yeah.
here that have long been closed out. So that gets reviewed every few months. Every few months.
I'm just wondering, even though, once again, I don't want to talk like it's wrong, but even though she could say, oh yeah, that performance bond's still there, the real question is should it be? Is that project really still open,
Yeah,
or
that
should the
part-
planning
that part
board
we
have
can control.
voted to close that project out and do whatever? That's maybe the part
And are
I
some
would
of those really
question.
old?
A couple are, yeah.
Yeah, because I know there's an abandoned property process too for maybe companies that went out of business years ago. We went through towns that still have planning bonds from the 1990s or 80s.
Yeah.
And we've said, do an abandoned property, try to get them the money. If you can't, it
Keep it.
goes, town keeps it. So that's a,
Because if they walked off the project, the real question is did the town in some way, shape, or form actually supplement what that work was? Did your highway department have to go in and finish capping
Yeah,
off those
finish
pipes
off
or
that.
water?
It's like paying our cell phone bills.
Yeah, because that's what the performance bond is there, is that they walk off and work has to be done by the town now has a revenue source to do it. Maybe the town did do that and somebody forgot to give the town the money.
okay. I believe the final topic is the student activity accounts, which we're going to get into in a lot of detail, Superintendent, this afternoon when we meet. What time is that meeting?
5 o'clock.
Yeah, at 5 with the school committee. But I wanted to at least highlight it, and I'm glad you're here. Just for the audit committee's edification, student activities that never been audited in the past. MGL requires an audit at least once every 3 years. A lot of communities do it every year, but it's at least once every 3 years. It falls under the jurisdiction of the school committee, so we'll be talking to them this afternoon about how the student activities should be working. The two big issues that relate to town here is, number one, when the school, the way that they work is there is a savings account at Town Hall, and there's a checking account at the 3 schools. Each school has its own checking account. What the schools are allowed to do is write checks against those checking accounts.
It's like a petty cash.
Like a petty cash.
Is the best way to think of it.
So say there's $10,000 in it, they write $8,000 worth of checks. Now they're down to $2,000. Well, they're going to send a request for reimbursement to the treasurer's office saying, I need you to move $8,000 back into the checking account to bring it back up to 10. The way it should work is the school is supposed to submit a request with all the checks and invoices that they spent against that $10,000. And then the accounting office would have that information available to see if they could challenge it or determine if it's fine and appropriate. And right now it's just a memorandum saying, can you wire $8,000? Can you wire $10,000?
That has been changed.
That's been changed. Okay, so that was one of the issues we saw. And the second issue is when they reconcile, the individual schools just reconcile to their individual checking accounts. Yet there's this savings account that has all the big bucks up at Town Hall. There's over $200,000 worth of money at Town Hall. So no one's reconciling. If I've got a fund, it's going to be made up of the checking account plus the agency account. Okay, nobody does that. Nobody goes through that process. And we'll talk about that in detail this afternoon. When we did it, we were off big amounts. We were off very, very large amounts. And I've come up with a couple of recommendations of how to resolve that, but there's big significant variances.
How do you define big? Yeah.
Well, the high school was off, what, close to 100, right? I don't have the
80,
report.
I think.
Yeah. Well, the challenge is actually going to be how to allocate $100,000 to student activities. Because
Yeah, where do you put it?
Where do you put it? What student activity group needs $100,000? Yeah, it is the student's money. So
It's there.
Yeah, and it's there.
Well, the high school is under by 80, right?
Yeah, the high school agency account is under by 76.
76.
But
Elementary is
the
over.
elementary is over by 85.
Yeah.
I think what has happened over time, and
Yeah.
you can correct me if
Yeah.
I'm wrong, some of the money that should have followed classes did
Right.
not follow classes because that amount of money in an elementary agency account
It's insane.
bizarre.
Yeah.
Isn't right.
So the net
So
number.
I think
No,
what we'll
but
do
then-
is a transfer to,
Between.
but
yeah.
the bottom line, people should know, is a positive.
Yeah.
It's a positive.
Yeah.
Positive
19,000.
positive 19,000.
Yeah.
Right. Okay. The bottom line.
Yeah.
So it looks like it's a mix. We couldn't prove that was the case, but it looks like that's a reasonable assumption that was the case.
Tony, this is maybe a little different issue. The community school is picked up as part of the town's audit, or is that a separate?
Yeah, it is.
Just to be sure. Okay.
So this is so these are the big aspects. You go to the next slide, Chad. We'll just some. We talked about the reconciling issues. Formal policies and procedures. There is a policy at the school. It's not really followed. There's no evidence that the activities are approved by the school committee. At the beginning of each school year, they should say, okay, we're going to have these 30 or 40 activities. Here's the mission, the goal, and here's the funding source and how it's spent. That should be one meeting at the school committee, and they should, basically it's a rubber stamp. There were situations where backup and supporting documents were missing. Excessive payments to individuals. There was one individual that insisted that the checks be written to her. She would go out and procure everything, and the checks would be written to her. Well, when I added them up, it was $22,000. So, that's concerning to me. That why can't the bill be submitted to the central office?
Pay the
So
vendor.
just to clarify, it was a Spanish trip.
Yeah.
So the Spanish teacher was paying bills and then going through, so it wasn't clean.
It's a good credit card line.
Needs to be.
Well, that's what the first thing that came to mind is you see the credit card points, and the same thing with another one where Stop and Shop payments, about another 8,000 or 9,000 in Stop and Shop payments, and this.
And yet the town has an account, I think.
Points, exactly.
Yeah.
So
I guess, Tony, on this, I know that
Yeah.
this is not a direct correlation with the audit committee and some of the jurisdiction of the school committee, but when things are settled, can we be advised on how things are going?
I think we should do that. I mean, I would assume there'd be a follow-up audit. You try to, I think you're bringing Mark Abrams in, I think, to look at things, and then I assume there'd be a follow-up audit in the fall just to see where it's kind of filtered out.
If I could jump in, it's
Yeah.
kind of interesting because when I heard from Irene and then Tony that he was coming to meet with and review the student activity funds, I said, great. I think that the actual day was wrong, but I figured, or it didn't work for us, and we postponed it a couple of days. But I've been here 3 years, and I just thought that made sense. This is the third year, we're up. It was a shock to me to hear that they had never been audited. And so I'm delighted that we have.
So how would you know? It's your third year.
Right.
Right, it just came up and I was thinking, okay, that makes sense. But, wow.
Okay.
Yep, and we've already made some changes and we'll make it.
Yeah. So, and we're going to go over in detail with the school committee the findings. So we won't. We don't have to get into the nitty-gritty of this. And then any further questions? It was a long one.
That was a good presentation.
Thank you very much.
I would throw in there, and there were a couple of instances where we found stuff, and I want to, to the extent possible, I want to encourage it and give it a positive. There were a few things we mentioned, like separating the water billing and stuff. Given the location and everything, what was particularly nice is when we found a lot of these issues, there was an immediate attempt to fix it. And I think that's, when it's possible, that's something we'd want to encourage.
Yeah.
Only because we're here and in person. A lot of the stuff, I know we'd say, well, think about doing this, and you guys would get back to us with, well, what do you think about this? And there was a much more direct communication. I think it might have helped you guys in fixing stuff by having us on site as you were fixing it. And it's kind of nice because a lot of times we'll have these discussions, we'll write the management letter. A group like this will get it 4 months later, and the answers are not, yeah, we already fixed it. It's, oh yeah, we're looking into it, or things like that. And the next year we have to write the management letter again with the same comments. And I think it's fair to say that there was a lot of immediate attention.
The letters I always worry about are ING. In other words, if the responses are, I'm going to fix it, as opposed to past tense, that's an alert.
Now,
Well, it's a big difference. If every response is ING, you got a problem.
Yeah, you're collecting the corrective action or the
Yeah,
responses
so,
from management?
I think I've talked to Rick about this, but I don't know if I mentioned it to you too. The management letter is out, it's done. We have talked at some length internally about a response to it. In past years, we've inserted our responses into the management letter, and that's sort of cumbersome and hard to follow a little bit sometimes. So we've looked around at some other towns and how they respond to the management letter. Some I found don't even respond at all, but it does depend on the magnitude of the findings. In any case, we found that in the town of Orleans, which happens to be a client, they have a nice format where they sort of list out the finding or the recommendation, and then there's an identification of what is being done about it and who is doing it and what the timeline is. So we're going to do that, and we're working on a draft now. I've gotten a number of responses back from the departments. It just hasn't been consolidated yet into a document, but we're going to work on that over the next couple of weeks, and by the time the next meeting comes around, we should be able to review that.
So we have a copy of the management letter in our package, but the idea would be at the next meeting, we review the letter and the responses at the same time.
Yeah, and then you sort of okay the corrective responses, and then we would post that to the website with the management.
You know, it's a little work, but I think responding, I think it's a good thing.
Yes,
It's a good
de-
process.
definitely.
We brought final bound copies of the management letter, financial statements in the airport, are in the box in the back. I don't know if you want to take them back to town hall, then distribute them, or how you want to do
We'll
it.
figure out how to do that. We'll also get it, you've sent us
You've got
PDFs.
electronics of everything.
So
yeah.
we're gonna get, if we haven't already, we'll get those on the website, so we will. And are they final? So.
What
They're all
I've given you so
bound, yeah.
far is fine.
Okay.
Yep.
Has things been sent to DOR and whoever
No.
else needs
No,
to?
not
okay.
yet. We're waiting
Do
for
you-
single audit from, is it Glenn, or someone's going to
Couple of
respond.
responses, yeah.
We're waiting for one response on the single audit. And then the end-of-year report, that's another thing that Glenn's got to get is that information. So those two reports are not done. Again, we're waiting on the school to get us that.
Just that whatever you're waiting for is not a big deal, or just?
No.
No, okay.
No, as long as those are submitted before March 31st, you're okay.
We'd love to get it out of the way.
Yeah,
Yeah.
oh yeah, I'd love to.
Yeah.
too. It's, you know, it's,
Before we go here, we'll figure out when our next meeting is, but maybe we can have a little report from you about when, or whoever, about when, if those things are done then.
I don't know if Bob was going to respond or if Glenn was going to respond, but we have a finding that the school and Munis didn't reconcile, so we want somebody to respond to how that's going to be.
Yeah, I mean, there's been, I mean, we can talk about it. I think there's a little bit of a, not completely in agreement with exactly whose responsibility it is to reconcile. For the record, our response is this: it's both.
It's not your
it-
problem.
Well,
Right.
yeah. Well, no. What I mean is in any reconciliations, particularly with the school and the town, it has to be done in tandem.
Yeah, you gotta-
I mean, what we're talking about is grants with a lot of very specialized information that I wouldn't expect anyone in a town accountant's or finance office to really know what's going on with that grant or the timing thereof or necessarily even how DESE is. And DESE has been changing their processes every other year for the last 5 years, so it's hard to stay on top of it. So that would be my only thing is that whatever you read in there, there is a shared responsibility to that aspect, and we got to get beyond that.
Yeah,
somehow.
because the difference between the management letter and the single audit is the feds require a response to be placed in the document
That's
itself.
corrective
So that's what's holding us up from finishing. So Bob and Glenn or someone should get together and say, okay, what's the response going to be?
So just to finalize, we don't send the final financials and the management letter without the single audit or the end, okay.
No.
So those need to get done. Is the single audit have anything besides school? Does it have the transportation planner stuff in there?
No findings, though.
No findings?
The airport grants in there.
So the
Yeah.
only
There's-
finding is that one.
All the
with
rest
school.
of it is
It's
done?
fine,
Yeah.
Okay.
done.
Yep.
That'll take us 5 minutes to put in,
Okay. all right.
and it's done. So once someone gives us that
And we
paragraph,
upload it and do all the
That'll be
reporting
done.
with the Fed.
Okay.
At some point, someone at the finance office,
Yeah.
I think the assessor, the interim,
yeah, and the-
has to sign off.
And the student activity, which is a separate report, that'll, once we get through tonight's meeting, we'll finalize that and get you, I don't know if you want to put that on the town's website or the school web, I don't know how you want to handle
The
that.
what?
The student activity report.
Oh,
So that's
I think we were just going to include it as
part of,
part of the management letter, right? You
We
mean
did
that-
two
It's a separate
reports.
report.
we did two
Separate
separate,
document.
just so it wouldn't be confusing, we
Right,
did two
I was
separate.
thinking we just posted.
In fact, is the student activities two separate reports too?
One.
One
Just
this time, okay.
So you think of that because it is, those aren't our monies. So
Right.
So I put it separate.
deal.
Yeah.
I don't mind putting it on our website if you want to put it on yours too, or you can have a link or,
I think we should have it.
yeah. I think
Yeah, I
it's
think-
financial stuff should be
I think it's
together.
Yeah, I think so too.
You know, it's part of the deal.
Yeah, so the only thing we have not even begun is the end-of-year procedures. And so as soon as we get that information, we're ready to roll on it. Like I said, I just like to get it all done.
And that end of year thing that you mentioned, is that a school? Is that
That's a
DOE
school thing,
report?
yeah.
Yeah.
That has nothing to do with finance, it's all school.
Okay, is that the DOE report?
Yep.
That was due in,
Like October 31st? Yes.
It's done.
Yeah.
It's done. He just needs to get us the backup and supporting information so we can do the audit.
It's filed at DOE.
So it is filed.
It's
filed.
just
Yeah,
the
we're waiting.
audit of it.
Yeah,
The
it's
audit
just,
of it,
yes.
okay. All right,
Yeah,
so
there's
we're
like
waiting-
1,000
We're waiting
accounts
for
that
the
have to be
information
massaged and
to
put
audit.
in there, so we're waiting for
So
the
we're not gonna
backup.
get a nasty email from DOR, it's just the finishing of the audit part, okay.
Yeah. No, and even then it'd be DSC, and as long as that's filed, you know, by the end of the year, you don't get nasty notes. But their timeline is usually March 31st for that,
Got it, all right, so we're waiting.
preferably. I mean, I'll take it later, but.
Mr. Chairman?
Yes?
Hi, I'm Craig Sperry. I serve on the Finance Committee with Dr. Mulcahy, just to verify the amount of the unfunded liabilities is $88 million for OPEB, and I saw in the audit that it's $52 million for Nantucket's portion of Barnstable County.
Yep, that's
That's going to come up at town meeting. I just want to verify.
Yep.
Right,
The right number.
It's worth following up there, as I recall, there are two numbers. One is if you funded it, and one is if you didn't. So there's-
yes, the 88 is the one is if you didn't.
And just a follow-up question, just for my own knowledge. You mentioned the SAS 115. These unfunded liabilities don't trigger a 115. It's a different category or something? Or?
No, because as long as you book the liability, as long as the liability is posted, you covered the accounting requirement for it. Now, if the town didn't have any idea what the liability was and hadn't gotten the actuarial done, then we would have a SAS 115 finding.
So, I'm sorry to take more time, but that triggers a question. I think with the pension and maybe with the health insurance, we, in the actuarial report, we're like 9.8% of the Barnstable County fund.
Yep.
And it's sort of, that fund is, so that 9.8 is based on what, the number of employees, the number of retirees, the number of somethings. But our relationship to the total could change drastically depending on what those criteria are. I say drastically, let's say it could change from year to year. So if it was based on total number of active employees, just to make an example, we might be 9.8% this year, but if we double our staff next year, we might be 16.2. And nobody else doubled their staff.
More people be a greater ratio.
So
for
what's
all.
it, I'm trying to understand how it works, because I have this feeling that things, I'm not sure our relationship is all that direct.
I think they calculate it actually by town and then bring it together.
Yeah,
Like they,
I think.
I don't think they start at the larger number and go down. I think they start at the smaller number and
So
go up.
help me out there.
It's the assessment is based on the amount of salary. On September 30th of each year, I have to report the amount of salary everyone's being paid as of September 30th that year. So I report the
So that's
salary
current employees. in
for
effect.
all active employees. So you
And
report
that's,
the salary, and then and every single town that's part of Barnstable has to do that as well. And then they work on their percentages, so, what's the total, what's the
Now, is that the
percentage?
pension side?
That's Barnstable County Retirement,
That's the pension. Now, the OPEB is,
Let's just keep with the pension for
Okay.
the same. So my example, however, can still follow. In other words, if based on 70 million of payroll for us and $1 billion for everybody, we're 7%. Next year, we double our staff and our payroll is 140 million, and nobody else does. And we're 14%. Yet we haven't contributed 14%.
no,
I'm
but
trying
you'll
to
be
get- I'm
asked
trying
to, but you'll be asked to
to
contribute
make up
14%.
the difference somehow.
Yes.
It's just
They'll
a
catch up to
little-
you.
They will,
Yes.
because they're not billing us based on,
It may be a year or two behind, but they will catch up once,
Well, once they do their routine actuarials and stuff like that.
which has to be every 2 years by law.
Yeah.
so
Yeah.
I think we're gonna
just
get-
an interesting kind of, I'm not, maybe it works, but I'm just puzzled.
One of
by
the
it.
things one of the things I recommend to the towns is to talk to the actuary. Siegel, maybe do one of those finance committee. Maybe they can Skype in, or they can do it via telephone.
Yeah.
And ask those, so they're the experts in that particular field. We kind of just take the numbers and use them.
We've had them in at least twice.
Okay.
and people tend to get sleepy.
You can get
Yeah, that's
Yeah,
not,
it's dry.
And my question seems to be a little bit different. I mean,
Yeah.
there's the actuary report itself, and that does
Yeah.
what it does, but I'm just, it's different from where you have your own fund.
Yeah.
And then it's clear we're paying for our retirees, but the number of retirees may or may not bear a relationship to the current payroll. It's just
The
all,
assessment each year is for the unfunded liability.
right, so that's based on,
That's what that's.
I gotta stop.
Employees,
Well,
the
we're gonna
employees
get-
make their own retirement through weekly deductions.
is
We're
the
talking
thinking to
about
set up
the-
your own retirement system?
No, I'm just trying to make sure I'm comfortable. It's not for here, we'll deal with it.
Yeah.
We're gonna hear a lot more about this when the Barnstable County Retirement Director comes on February.
Now,
Now, you're paying your assessment all on July 1st, is that correct?
Yes, because you get a discount if
You
you
get
pay
the
it
big
all at
discount,
once.
right, I
and
just wanna make
this
sure,
year
yeah,
it's a
'cause you got plenty.
$95,000 discount.
Yeah,
That's a
right.
lot.
You got
yeah, we're
plenty of
finding some
cash.
communities aren't, so we've started
Yeah.
Oh,
learning.
yeah, we've
that,
been doing that, I think,
'Cause
for the
they-
last 3 or 4 years.
Perfect.
Since they
Since
offered
day
it.
one,
Yep.
yeah. Since day one, they started offering that discount.
Perfect.
All right,
So,
so,
good savings.
Mhm.
any other questions for the audit committee, or by the audit committee, and the day of the next meeting? Do you want to find a
Let's
date
talk
and just
about
let
that.
us know, or?
We have one right now scheduled for the 28th. That's in 2 weeks
Of
of
March.
January.
You know, it's maybe tight for your management letters. so
Yeah, you want to do,
Let's pick, say, the middle of April or something, or?
oh, I wasn't even going to go
March?
that far out. Why don't we do March? Why don't we do either the week of the 10th or the week of the 17th? So that would be either the 11th, if we're sticking to our Tuesday schedule, or the 18th. I can
I'm
do,
sorry, I thought you were already in March, so that's all right.
you want to do March 18th? Because that'll be
Just pick a
before
date.
the final due date of things,
Yeah.
but we can make sure
9
it's
o'clock?
all in. Yeah, what, have we been doing that?
We've been doing that.
Is that a Tuesday?
With the two, is that okay? Or
Yeah.
is that not?
I like 10:30, but, because I usually have something else going, I'm happy to rearrange.
I can do,
Does it make any difference to anybody else?
I prefer Wednesday.
just the day.
Bruce prefers Wednesdays. Wednesday's fine with me too. Does that work for everybody or not? Because that's board day.
Yeah,
Whether that's-
which, I don't totally, I don't mind that.
I don't know.
But, can we do 9 then?
Yes.
Okay,
Yes.
Okay.
let's do 9 on Wednesday the 19th.
Okay.
And we can Skype in.
You can
or-
Skype in if you
Yeah,
need.
or if I'm on the road, I'll call in or whatever.
Let's try to do a Skype thing. Martin, can you make a note of that? Thank you.
All right, that's it. So, Bruce, how about an adjournment?
Motion to adjourn.
Motion adjourned, Nate, say it. All in favor, say aye. Thank you very much. Thanks for showing up. Good show.
Thank you.
Thank you.
I guess, did Matt leave?
Yes.
Okay.
Set your call.
All right, the next, can